Bloomberg News has learned that Senator Barbara Boxer, the California Democrat who's writing a new version of the cap-and-trade legislation passed by the House, says her bill will curtail over-the-counter or dark market trading in carbon dioxide permits. Boxer says only open, transparent trading will be permitted. At Ditmire, Fox-Pitt, Kelton, he joins us for his thoughts on the exchanges. Good to have you with us, Ed. Thanks for coming in. What does this mean? I mean, everyone's been looking to cap and trade and carbon trading as some kind of panacea for eroding volumes on a lot of other exchanges. Is this really meaningful?
It could be. You know, everyone thinks that, or many people, including myself, think that energy and pollution credits could be as big a market as energy trading is today someday. And I think that in itself is bringing up a lot of issues. A lot of people in Congress and ordinary Americans believe that, perhaps excessive speculation is, adding volatility or to the level of various commodities prices, particularly oil, gasoline. So I think as the legislators contemplate creating a tradable market in these credits, they want to make sure that, it's a very well supervised market structure, something that, would bode well for exchanges versus the over-the-counter market.
Who gets hurt if indeed we do get this kind of regulation as to what we call, let's say, speculation? Some people call it over-speculation.
Well, in the United States, commodity trading is principally done by two exchanges, the Intercontinental Exchange and the CME Group. It's about two-thirds of the revenues at Intercontinental Exchange and about a third of the revenues at CME Group. And so those exchanges have, a lot at stake. What I would say, though, is, if the exchanges are right and the markets are merely reflecting a volatile world, that should mean stable business. But on the other hand, if people that believe that, various things have distorted markets are correct and regulation corrects that, then, by all means, an improved market would do well as well.
All right. So what does that mean for the actual stocks? I mean, let's talk about CME.
Mm-hmm. Well, what I think is what it means is that over the next few months, there's going to be a real step up in the amount of volume coming out of Washington, both from the CFTC, the Commodities Future Trading Commission, that regulates commodities markets in the U.S., and the Congress. And I think this could be a turbulent period for the exchanges with heightened uncertainties. But I think this will probably be resolved in a satisfactory manner into the third quarter and the fourth quarter. And then I think as people see that the volumes, keep ticking on, it'll be an issue that falls more into the rearview mirror.
All right, so what's the reason then for the inline recommendation for CME?
Generally, volumes have been flattish over the last few quarters. CME's earnings are flattish. And I think right now, that's probably not going to change over the next few quarters. In the longer term, we're pretty bullish on the exchange space, and CME included. But I think investors could wait on the sideline a quarter or two, particularly they might want to sidestep, this issue that'll be coming to a head over commodities trading this summer.
Okay, so maybe don't pass on that trade. What about the NYSE Euronext? They're expected to report this week. What happens there?
Yeah, NYSE Euronext we think is the perfect stock for flattish volume trends, and the reason why is because it's a big restructuring story. Of all the exchanges I cover, no exchange has more room to improve itself internally, cut costs, implement better trading systems, and come out of this with a higher earnings power than NYSE Euronext. Most of the other exchanges I cover already have high margins, are efficient, and are just waiting for better industry tailwinds. NYSE is a special circumstance that can grow its earnings even in flattish market conditions.
Has Duncan Niederauer, the head of the NYSE Euronext, has he been able to really make this integration with Euronext work?
Well, I think we're getting towards the the eighth and ninth inning of what's been a very long process, and with the stock relatively depressed in our view in terms of relative valuation, we think investors can get on board for that eighth, ninth inning and enjoy the benefits of a much more efficient company on the other end of this. That should come to a head somewhere around first quarter 2010.
All right. When NYSE and Euronext came together, everyone thought, okay, this is the beginning of this global exchange. What happened?
Well, I think, NYSE Euronext is some 15 or 16 exchanges under one roof. And, the company could have went two ways. It could be maybe an overdone conglomerate, a la, a Citigroup of exchanges. And I think that's what, a lot of investors felt is what they had the last couple of years. But on the other hand, what they have an opportunity to do is to unify all the businesses on one common platform and end up being, a relatively streamlined exchange that does large scale. And I think that's what, lies in the future over the next couple of years.
All right, and that's why you've got that rating, the outperform rating on the shares of NYSE Euronext. I want to thank you very much, Ed Ditmire, coming in from Fox-Pitt, Kelton, sharing your insight into the world of exchange.